Hello everyone. Recently, Titan, Senco, and Kalyan Jewellery have shared their business update. And after the business update, Titan has fallen approximately 3%, and from lifetime high, it is down approximately 20%. Senco has fallen approximately 5% after the business update, and it is down approximately 15% from lifetime high. But there is no impact on Kalyan Jewellery, and it is almost trading at lifetime high. Apart from that, there is a downgrade for the Titan stock by Kotak Securities, and they have downgraded it from add to reduce and have also reduced the target price. So in this video, we will analyze the reason behind the fall in Titan in Senco stock, and we will see if it is the right time to buy these stocks or do we need to wait for some more time. Additionally, I will analyze the jewelry industry in India, and I request you to watch the video till the end. Otherwise, if you miss few of the pointers, you will not be able to make any decision convincingly. Please note that all the information in the video is only for educational purpose, and please do reach out to your financial advisor before taking in decision. Moreover, I am not a SEBI registered analyst. First, let us discuss why Titan and Senco stock is falling. We will take help of latest business update to analyze this. And the reason lies in year-on-year growth. Titan has grown by only 9% year-on-year. Same is the scenario with Senco, and it has also grown by 9% year-on-year. Generally, both the stock grow at 20 to 25% CAGR. And if you see the Senco future update as well, they are planning to grow in the range of 80 to 20%. But Kalyan Jewelers has shown an overall growth of 27% year on year, and that is the reason there is no fall in it, and it is trading at lifetime. Let us analyze the reason for the slow growth in Titan and Senco. The first reason being high gold prices, which had an impact on consumer demand. As per Titan, domestic growth came largely through increase in average selling price, whereas buyer growth was in low single digit. World Gold Council reports gold buying by central bank was the key driver for price rise in quarter one. The other reason being lower number of wedding days. Next, let us discuss about industry overview, which will give us an understanding of future growth potential. One of the most important things to consider here is the rising share of organized retail in jewelry industry, and this is going to increase further. In 2000, the total contribution of organized sector was 5%, which has grown to 32% in 2020 and will be at 40% by 2025. Wedding jewelry dominates the industry with approximately 60% market share. Apart from that, rural India comprises 60% of total demand, and as the income level increases, the demand increases. South India constitutes 40% of total jewelry market in India. Additionally, India is the second largest gold market in the world. Apart from that, there is an increasing trend which is categorized by localized consumer preferences. And one good thing is that there is no inventory obsolescence risk given recyclability of jewelry. If you look into the structural growth drivers, there is a shift in the consumer behavior where most of them are focusing towards brand consciousness, and this will positively impact all the major brands. Apart from that, they're also looking for superior organization capabilities in terms of safety, security, and retail experience. So that is where if you go to any jewelry shop, they provide you world-class facility in terms of customer experience. The next and most important factor over here is supportive regulatory and legislative changes. Things like demonetization, GST, mandatory PAN, and hallmark of gold jewelry has made the process transparent and has enforced compliance. And this has impacted the industry in a positive way. So all these are major significant tailwinds which is impacting the jewelry industry. If you see over here from financial year 18 to 23, the total growth in the Indian gem and jewelry industry was 8%. And from financial year 24 to 28, it is expected to grow at 16% CAGR, which is again a positive news. This slide depicts the number of households in the top two income classes. And if you see, there will be an increase of approximately 13% in top income class, that is elite and affluent. Right now, the contribution is approximately 13% and it will grow to approximately 26% by financial year 30. And income level has a direct correlation with the jewelry demand in India. Next, we will do fundamental analysis for all the three companies to understand their business model. First, we will discuss about Kalyan and Senco, and Titan we will do separately. The reason being, Kalyan and Senco are entirely into jewelry segment, and Titan has other businesses as well apart from jewelry. So let us first discuss about Kalyan and Senco. Most important thing that you will find in all the jewelry business is their unwavering focus on building trust. If you see Kalyan, they have mentioned that they're India's most trusted jewelry brand, and Senco is also focusing on the trust aspect. If you have seen in your family also, your mom will generally go to buy jewelry from shops whom they know or have already bought from the shop in the past. This is the repeat customer, and repeat customer is higher in jewelry industry and it increases with risk. Kalyan Jewellers started the business more than 100 years ago. At that point, they were into textile industry. They opened the first jewelry shop in the year 1993 and they had their IPO in the year 2020. And coming back to Senco, they opened their first shop in the year 1938 and they had their IPO in the year 2020. Kalyan Jewelry is a 30-year-old company and they have 217 showrooms. When it comes to Senco, they are into business for more than 80 plus years and they have approximately 159 showrooms. Do you know that these numbers are as of March 24? Next, let us discuss about their product offerings. Kalyan offers a wide range of products targeted for different segment of customer as per their income. They also have products as per the occasion like bridal, daily wear, etc. Same is the scenario for Senco as well, where they have different products for different segment and also based on occasion. In terms of geographical presence, they have branches across India. Kalyan is having high concentration in South and Senco in East. Marketing strategy also is kind of similar, where both of them are endorsed by famous Bollywood celebrity. This slide depicts for Kalyan and this is for Senco. Growth strategy for Kalyan includes hyper localization of jewelry, catering to varied geographies and customer segments, asset light franchising model, leveraging technology to drive footfalls, customer engagement and conversion. In terms of way forward, they are looking for same store sales growth, India and international expansion, rewarding shareholders through dividend. Senco also has almost similar strategy, which includes asset-light franchising model, focus on leveraging technology, hyper-localization, and opening more shops in India. Next, we will do fundamental analysis on Titan. Titan incorporated joint venture between Tata Group and Tamil Nadu Industrial Development Corporation in the year 1984 and started its journey as watch manufacturer in the year 1987. In 1996, they started the jewelry business, and in 2007, they started the Titan Eye Care. In 2013, they launched fragrance business, and in 2017, they launched Tanija. In terms of total number of stores, Titan has approximately 3,035 stores as of March 24, and they have a presence in 420 towns across India. And as I explained earlier, Titan is not only into jewelry segment, they are into different segments, which includes watches, eye care, fragrance, fashion, and dress wear. In jewelry, there are various brands, which includes Tanis, Mia, Joya, Carrot Link, catering to different customer segments as per various price point and occasion. Right now, they have 7% market share in jewelry segment and planning to make it to 10% by financial year 2027. Various brands in watch and wearable include Titan, Fastrack, Raga, Sonata, Tommy Hilfiger, etc. Titan Eye Plus is the eye care business of Titan, and in fragrance, we have Skin by Titan and Fastrack perfumes. In fashion accessories, they have bags and brands includes IRTS and Fastrack. In Indian dress wear, they started with Tanedia, through which they sell saris, and they are also right now launching other products like kurti. So these are the various brands of Titan, and as per this, it looks more like a lifestyle company as compared to jewelry company, and that is the reason I am discussing it separately as compared to Senco and Kalyan. But still, the majority of the revenue comes from jewelry business, which I will explain later. In the mass market, they have Sonata. In mid market, they have Mia, Caratling, Fastrack. In the premium segment, they have Talis, Raga, I Plus. In the luxury segment, they have Joya and Nebula. Apart from this, Titan also has few subsidiaries like Titan Engineering Automation Limited, which is into engineering and automation. This slide gives the list of all subsidiaries. This slide depicts the new store addition for jewelry segment, and they have added 174 stores in last financial year. In watches and wearable, they have added 115 stores. In eye care, they added 6 stores. For Tanir, it's 32. If you see the revenue growth for Titan on a 5-year CAGR basis, there is a double-digit revenue growth for all the segment apart from eye care, which signifies all the business are in growth sector. In terms of revenue, still 88% of revenue comes from jewelry sector, which I think is not promising, and management has said they are working on increasing the revenue from other sectors. One good thing over here is the share of total revenue from international market. In 2019, it was 0.8, and right now it is at 2.2. 20% of the sales is coming from digital presence, which is positive news. In terms of retail footprint, for all the segments, it is in double digit in terms of square feet area over last 5 years, except watches and wearable. And for watches and wearable, also it has come into double digit for last two financial year. It depicts their opening more stores and expanding across India. In terms of EBIT also, the overall EBIT margin has improved. Even though the competition has increased, EBIT margin has improved, which is really positive sign. And I will discuss the reason behind it in further slides. And one good news over here is, if you see financial year 19, only eye care business was having a negative EBIT. And in the financial year 2024, all the businesses are having a positive EBIT. And for emerging business, it is still low at this point of time, which they have updated in con call that it will improve in coming years. So this is what I was saying about. Even though there is competition in the market, they are able to improve the EBIT margin. And the reason behind that is reduced cost. Because of the operating leverage, they are able to reduce the cost from 17.8% to 14.6% from 2019 to 2024. Again, over here, this is really positive. Because of the positive operating cash flow, they are able to grow organically and they do not have to rely on external debt for growth. So, in flux, almost everything looks promising, but there are a few challenges which I will discuss further. In terms of opportunities, I already explained a few of the pointers like increase in the level of household income, and with increase in income, aspiration will increase, which will have positive impact on business. In terms of strength, these are few strengths that they have highlighted, which includes distribution network across the India, and they have high brand recognition. In terms of challenges, increasing competition is definitely a challenge where more numbers of organized players are coming into the mix. And because of the gold rates fluctuation, there is unpredictability in the operating margin. And they're tackling it through expansion, operating leverage, and premiumization. So if you see one thing that the management has clearly explained, and I will explain that when I go to con call, that at this point of time, their major focus is on growth. So they were growing at a rate of 20% CAGR, and they're planning to grow at the same rate, even though their EBIT margin might take a hit. Jewellery, watches, and eye care business are now established, and they're looking for the same EBIT margin of 15 to 20% growth. And in terms of emerging business, like wearable, Taneja, fragrance, etc., they're planning to grow at a 30 to 40% CAGR. And in terms of EBIT margin, they're planning to break even. Next, let us discuss few of the pointers from the con call. They have said eye care and perfume business will also sign as a lot of background work is done in last few years. On decrease in margin, they said high competition leading to customer offer was the reason for decrease in margin. In terms of competition, they have clearly explained that this is an ongoing thing and competition will be there. With respect to lab grown diamond, what they have noticed is there is not much demand increase for lab grown diamond in India, but we need to be cautious about the development and it might impact the industry in the future in a negative way. And this is where they explain that they want to push for the growth and they have done it consistently over several quarters and they will focus on that in the future also. So, EBIT margin can take a hit. They're also planning to renovate their existing stores and they've already renovated 50 stores in India. They're also quite optimistic about the future international diversification They have opened 16 stores as of now, and they're planning to make it to 30. Next, let us discuss about financial valuation and technical analysis. In terms of P ratio, Titan is trading at almost 5-year and 10-year median P. Kalyan and Senco is trading in the higher range. Out of all these stocks, Kalyan is trading at a highest P as compared to the median P. Additionally, please make a note that Senco stock got listed recently, so there is a limited information here. In terms of P ratio, Titan and Kalyan Jewellery are now in the same line, and Senco is trading at half of both. Giving such a high PE to Kalyan Jewellery, I think is not explainable, and that is the reason I would say we should definitely stay away from Kalyan Jewellers until unless it corrects. Next, let us take a look at few of the important metrics. ROC and ROE of Titan is pretty high as compared to both Kalyan and Senco, which is definitely a positive sign. And that is the reason why it is commanding a higher premium or higher PE. Same way for operating profit margin also, it is having the highest profit margin, resulting in higher valuation. The debt to equity ratio is more than one for all the companies, and for Titan, as they acquired the entire stake in Kalyan recently, so it is highest. They had to take a loan because of that. The debt to equity is higher for Titan. In terms of promoter holding, all the companies are having a decent promoter holding. In terms of sales and net profit, for all the companies, sales and net profit has been increasing consistently. For Titan, if you see, in the last approximately 10 years, the sales has almost become 5 times, and the profit has also become 5 times. For Kalyan Jewelers, over the last 6 years, the sales has almost doubled, and the profit has become 4 to 5 times. The reason why profit has jumped exponential for Kalyan Jewelers is because earlier they were having higher debt, and now they have reduced the debt. Because of it, the profit has increased. Coming to Senco, for Senco, the sales has increased approximately 2.5 times over the last 6 years, and profit also has increased approximately 2.5 times over the last 6 years. So, in terms of sales and net profit, all the companies are doing good. In terms of balances, all the companies are having good reserves through which they can grow organically or inorganically. In terms of cash flow, Titan and Kalyan is maintaining a positive cash flow. For Senco, there is some issue in couple of quarters. So that is one red flag for the Senco stock. In terms of cash conversion cycle, also, all of them are having almost similar cash conversion cycle. Considering risk to reward ratio, Titan would be my top pick. If you want to take more risk, go with Senco. If Kalyan Jewelers corrects, then I might prefer to buy Kalyan. Else, I will ignore it for now. Now, let us take a look at technical analysis for all the three stocks, and we'll discuss what would be the ideal buying range. For Titan, the first buying range would be approximately 3100, and second buying range would be approximately 2900. For Kalyan, the first buying range would be 440, second 410, or 375. For Senco, it would be 960 and 850. So my take at this point of time is I'm not comfortable buying any of this company. If they correct and if they come to my buying price, then I will definitely go ahead and buy the stock. And out of all the stocks, I will go with Titan as my preferred pick. And if you are a risky player, then you can go with Kalyan and Senco as well. And most probably, these stocks will give you a CAGR of 12 to 17% if you buy at a decent level. Thanks for watching the video. If you find the content to be informative and helpful, please do like and share with your friends. Do subscribe to the channel to get real-time notification for such informative content. If you have any question, feel free to ask in the comment. And if you have not liked the video, please hit the dislike button and share the reason in the comment, and I will look into it. Thanks everyone. Thanks for watching.